Now take problem number 12 in page number 12.47. This is the problem taken from Corporate Accounting, Aral Gupta Radhaswamy, new edition. See, now we are required to prepare the P&L account. You know very well, P&L account is prepared based on schedule basis. So first we have to prepare the individual schedule, that is schedule number 13, 14, like that. We have to prepare the individual schedules. After individual schedules, main part of the statement we have to prepare. Income statement we should prepare. Right? First we take interest on bank loan 300 rupees. That interest, bank has provided the loan, term loan. We are all getting the loans from the bank, for which they are receiving the interest. So interest on a term loan is 300 is a income. You know very well, in a bank accounts only two types of incomes they are having. One is interest earned, and another one income is other than the interest what the income they are getting. It is grouped under the category called other incomes. Likewise, expenses, interest expended and operating expense. Okay, so first one, interest on term loans, that 300 we have to take. Then interest on fixed deposit, you know very well, bank is collecting the deposit, from that they are pay, for that they are paying the interest, so it is a expense that comes under schedule number 15. Then commission, it is other income. Okay, commission, actually this is coming under the category called commission, brokerage, etc. So that commission of 100 is taken in schedule number 14. Then exchange and brokerage 200, that should go also goes to other income, schedule number 14. Then interest on cash credit. Basically, as a commerce student, you know cash credit is a loan item. Okay, loan item, it is a facility, loan facility, for which if you are paying the interest, it's a income for the bank. So interest on cash credit is a interest. Then another one is interest on savings bank deposit. Term itself is self-explanatory. That amount of interest is paid for savings deposit, so it is a expenses, interest expended. Then next one is on temporary overdraft. Overdraft is also coming under loan category. So what the interest you are paying for the overdraft is income. Okay, as a customer, bank is collecting the interest from the for the from the customer for the overdraft. Then next one is postage, telegram, printing and stationery, sundry expenses, rent, taxes, license fee, audit fee. All those things are administrative expenses. So actually we have to take it in the schedule called operating expense, schedule number 16. Then next one is income on investments. That income on investment, which is it's a income. Okay, income on investments, which is a income 250 rupees, we have to take it as income. Actually it is other income. Okay, we have to take it as other income, or even if it is, if you are considering this in interest earned schedule number 13, that is also equally valid one. Then next one, additional informations. Let us take the additional informations. Rebate on bill discounted, the amount of bill discounted is 30. We have to deduct it from interest earned schedule. In this rebate on bill discounted, you please put a mark on that point. Why? Because interest on rebate bill discounted, actually opening balance is already I told you, explained you, rebate on bill discounted, opening balance should be added with schedule number 13, closing balance is deducted from schedule number 13. Whereas if it is given as only the only item as rebate on bill discounted in additional informations, it is presumed, once again I repeat, it is presumed that it was already adjusted with the schedule number 13. We should not once again give effect for that. But in this question, it is given as rebate on bill discounted as additional informations, that is adjustments given in additional information adjustments, we are considering it. That means what is the meaning for this? it was not already considered, so we have to give the effect for that rebate on bill discounted 30 rupees. Then salary to managing director, you know very well, salaries and allowances are coming under operating expenses. Likewise, if the salary is given in adjustments, that is also a operating expense. Provision for income tax to be made at 50%, rounded off to nearest 1000. See, always in bank accounts, insurance accounts, etc., in these chapters, it is better to round it off the informations to the nearest 1000. Okay, so accordingly, we have to round it off this figure to nearest 1000. But 50% on provision for tax, how it should be calculated? Simple. Total amount of income, that is 1225, minus expenses. What are all the expenditure you are having? Number one, interest expenses expended 350, then operating expenses, and then provision we have to calculate. So provision amount should not be taken, and what other information to be deducted. All those things we have to consider in the question. Have a look on that problem. Investments, held maturities, depreciation, 50 and another one is available for sale category 25. All those things should be deducted from the income side. Income, then very simple, total income minus expenses to be deducted. Balance is what? On that 50% you will have to calculate. That comes to 120. Okay, so that we have to take it here. Then next item is interest on NPA is given below. See, no need to calculate it. It is already given. You know very well. Classification of NPA under the category of good debt, bad debt, and standard asset, substandard asset, doubtful debt. Up to 1 year, what is the provision? More than 1 to 3 years, what is the provision? And more than 3 years, what would be the provision? If it is more than 3 years, that amount of a provision is considered as loss asset. Then we have to take accordingly as per the norms given by the banking regulation. We should take the provisions. Here it is given in the question itself. No need to calculate. You are given with the informations. That is up to 1 year 200 rupees, 1 to 3 year 200 rupees, and more than 3 years 100 rupees. Okay, that comes to 50, 500. Then loss asset is 150. So total 550 we have to take it from the provision for the classification of the advances. We have to take this as a separate category called provisioning for NPAs. What is that NPA? Non-performing asset. That provisioning for NPA, that we have to take like this. Okay. Then the next one information is now we have taken what are all the incomes. That is in income side 1900 plus another other income is 325. Total income 1225. Expenditure 350 plus 255 plus 500. Total amount of expenditure is 1105. Please mind it carefully. I have shown two things. What? Provision for tax is calculated as 120. Then another one is total amount of provision. What is that total amount of provision? It is given as 25 plus 50 plus 500. Okay, that amount of provisioning, total amount of provisions, total comes to 500 provision and contingencies. That amount of 500 should also be calculated separately. 25 plus 355 plus 120. 120 is the provision for income tax. Rest of the things are given in the question itself. Okay, so we have to take that amount, and only item you should consider, that is at the time of calculating provision for income tax, income minus expenses other than provision, that you have to take. For here we are going to calculate the total income. So income minus all expenses including provisions and contingencies. Balance is the current net profit. Current net profit. Profit brought forward is not given. So total amount of profit is 120. Then Appropriations we have to take that amount of appropriation. What are all the items you have to take? Transfer to statutory reserve, proposed dividend, transfer for any other reserve, general reserve. All those things we should take it in the appropriations. Here we are given with only item called statutory reserve. What is the percentage? For your batch, always it is 20% only. That means previously it was 10%, 15%, whereas now it is fixed as 24, 20%. That 20% should be calculated on net profit. The current net profit is 120. On that 20% comes to 24 rupees. Okay, that we have to take. Total income of 120 minus statutory reserve is 24. Balance is 96. That 96 that goes to two things you should keep in mind. The amount of a balance is 96 rupees. That should goes to the balance sheet surplus. That is schedule number 2A. 2A is reserve, 2B is surplus. There we have to take. And another one point you should see here is statutory reserve of 24 rupees we calculated. That amount of 24 rupees should be in schedule number 2A, that is reserves category in balance sheet liability side. Okay, what the amount of profit final transferring to balance sheet is taken in surplus side, surplus item, that is section 2A 2B. Reserves and surplus is 2. On that A is reserve, that is statutory reserve we are taking there, and B is surplus. On that what the final profit we are transferring, that 96 we have to consider, we have to take in surplus part. Okay, so this is typical problem for essay type question. But at the same time, if you are aware about how to create the provision, how to what is the percentage of provisions we should create for NPA and related things, then very easily you can calculate. The only point is you please have a look on that. Interest on credit earned is one amount, received is another amount. Received in the sense interest received on cash credit. Basically, you know what is cash credit. Interest on cash credit, what the amount they have earned, that 100 should be deducted from the item of 240 rupees. Balance amount is interest on cash credit received, that 80 rupees you will have to add with the interest on cash credit. Like that, what is the amount given, what is the amount we have to take as earned, all those things you should concentrate. Okay, this is an important problem for essay type question.